Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is September 30th, 2016, last day of the month, last day of the quarter, and this is the daily report for gold and silver, our weekend review in which we combine it with trading markets to take a look at activity that occurred this week in the market, as well as talking about our forecast for next week. Gold under pressure really throughout the week. Now, we did pull profits on a trade earlier this week. We'll go over that in detail when we take a look at our first chart, but we do have gold trading off about $3 on the day, 1317.39. It is traded to a low of 1313.46 and a high of 1328.06. When we look at COMEX, of course, that was spot. We're at 1320, putting it off about $5 on the day with the low 1316 and the high 1331. Silver kind of bucking the trend. That is trading higher today, trading up about 1/3%, 19.25, up about 6 to 7 cents on the day with a low of 19.12 and a high of 19.77. So we are closing well off the high on the day. We'll definitely want to take a look at that today. And then finally, let's take a look at silver in terms of a spot price, trading up about a dime at 19.17. So traders, first thing that I do want to cover on today's show is a trade that we got out of on Monday and Tuesday of this week. Of course, we got in that just prior the week before. We actually put our position on roughly at 1317. It was right before the FOMC meeting. Not this week, but last week, and it was right in here that we actually got in. We saw this market really spike up and spike to higher pricing. This, of course, would have been a week ago Friday. Then on Monday of this week, you can see this small candle. In fact, let's go ahead and kind of blow this up. But on Monday, what we saw was a really small trading day in terms of the range, and that would have been right in here. Of course, let's kind of highlight this. But the way that you want to look at it, of course, is this Friday, Thursday, Wednesday, Tuesday. And so Monday night was this candle right in here, or Monday afternoon, I should say. And we had sizable profits in the marketplace. And the fact that it had not made a new high really concerned me. So what we did is we recommended that you can either A, simply exit the market, so you would have gotten in at 1317 and out at 1331. That was roughly the area that we would have gotten out at. Or simply moved our stops up. If you did that, you got out at roughly 1325. And so really we had a pretty decent trade. Even getting out at 1325, you made about 8% profit. If you got out at 1331, you were able to take much more profits. Really, you were able to take about a 14% profit on a trade that amounted to under 2 weeks of trading time. Now, what does that mean for gold right now? I do believe the following. First of all, we are still absolutely in a bullish cycle, and I'll show you a weekly chart that kind of illustrates that point in a second. But the second thing is we've got really strong support roughly at 1308, 1305. We're sitting at 1320. And my sense is that you can almost see a quadruple bottom here. 1, 2, 3, 4 times it's hit there. And so my sense is if we see this market continue with some weakness, I am going to look to buy gold roughly in this area where I see really strong support. Now, that's important because it's a lower risk trade in that we just simply place our stop just below this particular price point. But I do believe we are still in a bullish phase, and to illustrate that, we really need to look at a weekly chart. Let me go ahead and pull that up. So traders, I still believe that we are in a bullish cycle in gold, regardless of the fact that the market has been under pressure. The fact of the matter is, since the beginning of this year, the end of last year, we have seen gold trade up from about $10.50 per ounce to over $1,300, closing at $1,320 today. Now, I draw your attention to the chart that I've just put up on the screen. This is a weekly chart, candlestick format, and what's very important on this chart that I really want to hone in on is the fact that we have a 28-week moving average. The reason that I've pulled that up, and we looked at this chart a little bit yesterday, but I think it's appropriate to revisit it, is the fact that this particular cycle of moving average will really give us a broad brushed or broad scope, so to speak, of whether or not we're in a bullish or bearish cycle. You can see that as this market moved up to these record highs, it remained effectively above that 28-week moving average. As the market started to come down, but even though it came down, it was oscillating between these highs and these lows here before it really broke. You can see that the moving average was pretty much at the midpoint, and that was telling you that this market was oscillating heavily, and it was an very, very difficult to define the trend. Now, that, of course, was until the market broke, which is right here. It breaks below this, and you can see it effectively trades below this till it hits this bottom here, which occurs middle of 2013, and then again we go into this oscillation. Although the market's down for the majority of the time, as you can see, the market trades below that moving average. Let me get a different kind of pointer so you can see how it trades below, right in here and in here and in here. Now, we did get a couple of areas in which we had these false breakouts because it did in fact trade above that 28-week moving average. And in fact, I recall quite vividly what happened the beginning of the year, because there were a couple of occurrences that really made us believe we had something different on our hands. Now, the first thing was that we once again broke above this 28-week moving average. We did that right here, and that was very strong. In fact, this is where we made a whole lot of money on a couple of trades as we caught this rally moving up. But the second thing was that we had a breakout when we took a look at a series of highs that gave us our resistance and this support. It was the fact that we broke above our 28 and then this effective breakout here. That really told me that we were looking at something different, because we finally broke above these highs in the market. And so this has been a really effective moving average to look at. Now, with that in mind, take a look at our most recent activity. We are still well above this moving average any way, shape, or form you want to look at it. And that, on a technical basis, is why I believe we are still in a bullish phase. And so in conclusion, I am looking at the possibility of the market trading a little bit lower throughout the week. We've got absolute support, I believe, at 1308. We talked about the fact that we are absolutely still, I believe, in a bullish cycle, although we've been under pressure. And the disheartening thing is these series of lower highs, yes, there's no doubt. And then we have what's called a flat bottom, meaning these equal lows. Now, with that in mind, I talked to you about our next real trade. I would look for the market to dip back to this area down here, and at that point, look to buy it. Now, in order to really get a technical confirmation that we've got something different on our hands, I draw your attention to the fact that we've got this compression of range once again, and I am looking for that break above this long-standing resistance, just as we saw that at the beginning of the year. That would be a signal for me that we would then go to these new highs. Up until then, though, we are looking at a market that's in a defined range with about 1350 or 60 on the top and about 1300 on the bottom. Now, an incredibly interesting day in silver. Take a look at this candle. Let's first go ahead and blow that up. You absolutely have an inverted hammer, or a doji. It would be a tombow doji, which is a gravestone doji. But the one thing that you can see, we'll go ahead and kind of compress this again. And this was really pointed out to me by one of our subscribers who sent me a chart. And that is this compression triangle that silver is currently trading within. You can define our upper level resistance by really fixing these highs right in here. And then, of course, our lower level support by fixing these lows right here and then here. And interestingly enough, the market did close near the bottom or support area, but look at how it ventured into this range. Really an incredible day when you consider the high was 1917 and it closed at 1924. So we're absolutely, one, getting very, very close to the apex. We will see a release of energy. So I have a feeling we could see some real fireworks in silver next week. So traders, in as much as gold finished on a soft note today, we had the Dow Jones Industrial Average closing on really solid ground to finish off the quarter, closing up about 164 points at 18,308. Now, you wouldn't notice it from a daily chart. This, of course, is our daily chart right in here, and you can absolutely see that we have had oscillating candle color, meaning we've had strong up days and strong down days. And that, of course, is when we look at a daily chart. But when you pull up a weekly chart, let's go ahead and do that real quick. You can see that over the last 3 weeks, although we're not close to the record tops in the market, we have seen some solid gains in U.S. equities vis-a-vis the Dow Jones Industrial Average. Now, Standard & Poor's also closing up about 0.5%, call it at 2160.50 with a low of 35 and a high of 66. And really the big winner throughout these last couple of weeks have been the NASDAQ. NASDAQ closing either at or near a new contract high. This, of course, is the NASDAQ 100 E-mini, 4870.25, up about 26 points on the day. OPEC meets this week, and in an apparent agreement as to curtailing production, we have seen crude oil move up phenomenally, up today really about 1/3%, but overall we've seen a dynamic move really from these lows at around $39 to where they sit now at about $48. Crude oil closing up 17 cents per barrel with a low of 47.04 and a high of 48.30 on the day. Traders, no doubt, we have seen gold under pressure for the better part of this week. And as we talked about at the beginning of the show, we did put a trade on. And on Monday, we recommended raising stops or simply taking our position to the market. For those that got out on Monday, we got in at 13.17, out at 13.31 for a pretty decent profit, considering we've seen now a repeat of what we saw a couple of weeks ago, in which the market came up, tested some highs, and then for the remainder of the week, slowly meandered to lower pricing. We're certainly going to take a look at the market next week, because my sense is that 1300, 1308 in that area has provided extremely solid support for the price of gold. We talked about the fact that on a long-term basis, when we look at our weekly charts, we're still in a bullish phase. So it's simply a matter of positioning ourselves properly to be able to glean profits out of the market. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Have a great weekend. Bye-bye.